If you are thinking about becoming a business person, an entrepreneur, you got to think about the business entity that you have to choose, right? And you have a lot of options. You have LLC, you have sole proprietorship, you have corporation. The big question is, which one should you choose? So, in today's conversation, I really want to give you the answer. I want to do a compare and contrast between LLC, sole proprietorship, and C corporation, for that matter, to really sort of pinpoint what's important for you. Here's an overview I want you to pay attention to. The thing is that right off the bat, I just want to say that by and large, LLCs are the best business structure for the majority of entrepreneurs in this country, based on our research, but based also on what we have seen in our own business clients. Okay, and our own team, we are established as an LLC, and but there are actually situations where it might be better to have a C corporation, or in rare cases to actually be a sole proprietorship. Now the thing is, you have to understand, if you are a sole proprietorship, you have no protection whatsoever. Okay, corporations are complex and subject to double taxation. Okay, so basically you do have a few pros and cons, but a few cons, so to speak. But you got to really choose the business structure that fits your situation. What I'm trying to say here is that if you have a business, sometimes it's just a lot better to remain a sole proprietorship, especially if the risk, actually the risk to your personal assets is not really high enough. Okay, because the whole thing is, when you will switch to an LLC or C corporation if you want to preserve your personal assets. Like you do not want people to go after your personal assets. But if you don't have any assets, or you just don't care, then it's just a lot better to remain a sole proprietorship. Okay, let's quickly go through the details here. So what is an LLC? An LLC is a limited liability company. So it's a legal entity business structure, and it can be used to run a business, or it can be used to hold assets such as real estates, boats, or aircraft, for example. So the owners of an LLC are called members. An LLC can be owned by one person, in other words, single member LLC, or an LLC can be owned by two or more people, that we talk about multi-member LLC. And an LLC is a business structure designed specifically to protect your personal assets from the liabilities of the business. That's for LLC. What about a corporation? Corporation is also a legal entity, business structure. It is most often used to run a large company with shareholders and investors, and they are not ideal for owning real estate. And the owners of a corporation are called shareholders. And after you form a corporation, you must elect a board of directors to oversee the company, and you must elect corporate officers to execute and run the day-to-day business. And corporations are what we typically think of when we hear Microsoft, Apple, IBM, McDonald's, etc. What about a sole proprietorship? Now, a sole proprietorship is basically when a person does not form a business entity and they operate the business as themselves. So in the eyes of the law, you are your business. This is a very risky structure, because if your business is sued, then you are personally responsible for all debts and liabilities. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now, let me talk to you about the benefits here. So I first gave you the overview. Now, let's talk about the benefits. First of all, let's talk about LLC advantages. So an LLC, really, when you think about it, is a hybrid between a corporation and a sole proprietorship, because an LLC harnesses the advantages of both while leaving behind their disadvantages. Let me just sort of break it down for you. The disadvantage of a corporation is that you have double taxation, right? The corporation must pay taxes at the federal level, and then the owners must pay taxes again on their dividends, on their personal income tax returns. Corporations are also tedious and expensive to set up. Again, you'll need to create a board of directors, you need to have corporate officers, and you need to issue stock to the shareholders. So the advantage of a corporation is liability protection. And so the owners are basically protected from the debts and liabilities of the business. This is pretty cool, right? Now, the disadvantage of a sole proprietorship here is that you have unlimited liability. This means what? It means that you, as the owner, you are completely responsible for all debts and liabilities of the business. So the advantage of a sole proprietorship is what's called pass-through taxation. In other words, simple taxation, not double taxation, simple taxation. Sole proprietorship income passes through right to the owner's individual tax return. This means what? It means that no corporate tax return and no double taxation whatsoever. This is really cool. So sole proprietorships are also a lot easier to set up, and they offer flexible management. You're not required to hold meetings, elect corporate officers, or issue shares of stock. So when you think about LLCs, you have to really think about the best of both worlds, really, okay? Because LLCs provide liability protection, so your personal assets are protected against creditors, and LLCs offer pass-through taxation. In other words, you are able to avoid the dreaded double taxation. So LLCs were actually adopted by state law in all 50 states nearly 30 years ago to encourage more small business growth. And LLCs are the most popular and the most flexible business structure for business owners, entrepreneurs, and real estate investors. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation between about LLCs, LLC versus sole proprietorship versus a corporation. Let me go a little bit in depth here. I really want to go granular, go detail here. Let's first talk about LLC versus sole proprietorship. I want to talk about that first so we can really look at the pros and cons. The thing is, each business structure has its advantages and disadvantages, okay? Now, when we talk about LLCs versus sole proprietorship, you need to understand choosing the right business structure when you start a new venture is really a critical decision. It's not just about where you live. It's not just about the niche you want to go after. It's not about your potential customers. It's all about how you are going to run your business from A to Z, your business vision, your business structure. Okay. Many small business owners, based on our research, they actually favor two popular business structures for flexibility and simplicity, right? So you have the sole proprietorships and then you have the LLCs. Now, people actually choose a lot of folks choose a sole proprietorship because they don't want to bother, really filing paperwork with the state, filing having a registered agent, for instance, or filing like a yearly sort of an annual report, no. People just want to run their business and actually pay their taxes, and that's it. Because the thing is, when you have an LLC, of course, basically you are afforded a protection for your personal assets, but in return, you have to actually inform authorities what's really happening in your business. Okay, now whether you go with sole proprietorships or limited liability companies depend on your situation, your business model, as I said before, the niche you want to go after. But some things you should consider when choosing your business structure are: number one, startup cost. Okay, government regulations and how this would impact you, liability protection, and tax implication. So when we talk about that, startup costs are really important, and so this is actually very important in terms of your liquidity, your cash inflows and cash outflows, and government regulations and how this could impact you depending upon the niche you want to go after. Some industries, as you know, are more regulated than others, and liability protection. If that's important for you, you can't be a sole proprietorship. Let's really go a little granular here. So what is the difference between an LLC and sole proprietorship? So basically, a limited liability company is actually a legal entity formed at the state level. So everything happens at the state level. No, the federal government is not involved. Now, recently that has changed with the passage of a law, of a 2024 law. It's actually called Corporate Transparency Act. So basically now if you have an LLC, you have to actually file paperwork with FinCEN where you disclose ownership details. So, but right now, by and large, an LLC is actually something formed at the state level. So an LLC exists separately from its owners, and the owners are known as members. So if you're listening to me right now, if you have an LLC, you are an LLC member. However, members are not personally responsible for business debts and liabilities, and instead the LLC is responsible. So basically, this clear segregation of liabilities and debts is pretty important when we talk about an LLC. When you talk about a sole proprietorship, you can only have one person, unless you have a QV. You have a QJV, so you have a qualified joint venture. But 99% of the time here, you have one person. So this is an unincorporated business owned by one person and run by one person. This option is actually the simplest, no muss, no fuss structure out there. You are entitled to all the profits of the business. However, unlike an LLC, you are also responsible for all of the liability. So, how does the management structure differ here? So, in an LLC, the business can be owned by one or more members. Members usually manage an LLC, but they can also appoint a manager to handle the day-to-day operation. So here you have member managed or manager managed. Okay, totally possible. The membership of an LLC and the way it will be run are laid out in a legal document known as an operating agreement. Okay. Now, what about personal liability protection? Well, with an LLC, your personal assets are actually considered hands off when it comes to business debt collection or other claims if your company is sued. In most cases, and that's a good thing, creditors cannot touch your home, car, or personal bank accounts. In a sole proprietorship, however, there is no separation between you and the business. So what happens here is that you are basically entitled to all of the profits. This is really good, right? Along with all the debts and obligations. So you actually take everything. You take the pros and cons. You can even be held responsible for liabilities caused by your employees. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC versus sole proprietorship versus corporation. Another question that's really important to really keep in mind is that can you mix business funds and personal finances really? Well, sole proprietors don't have to worry about mixing businesses and personal accounts from a legal standpoint because in the eyes of the law, they are regarded as one and the same. However, the practice is still discouraged by most experts, okay? In LLC, for instance, you must be careful to keep banking records and funds separate from your own personal records and funds. So violating this rule can result in the loss of your limited liability protection, really. Think about it. So it's one of those things we have to see what really works for you, okay? And what happens here is that, you have to ask yourself, does your business name need to be registered? Well, it really depends upon your state. Now, state regulation of LLCs include required words which must be included in the LLC name. For example, LLC or limited liability company, those might be required at the end of an LLC's name. So registering your LLC does give your name protection within your state. So it's only available within your state. That name protection is only within your state. Unless you actually patent, if you trademark the name at the federal level with the USPTO, then you have nationwide sort of coverage. Now, sole proprietors do not face the same requirements. However, if the business owner plans on operating under a company name instead of under their own name, they will need to register for a fictitious business name or DBA, doing business as their home state. So this is kind of important. And for a corporation, the rules are kind of similar to with LLCs also. Basically, you're going to have to find a name, and the name you're going to have Corp or Inc. or anything of a similar nature in the name of the company. Let's talk about the tax implications of each business structure. Okay, really important to understand. So by default, all profits made by an LLC are only taxed once. This is known as pass-through taxation. So pass-through taxation is kind of contradictory to double taxation. Okay, pass-through taxation, as the owner, the tax liability belongs to you and passes through to your personal tax return. So when you file your paperwork, you're gonna have to pay taxes on that income. So to file taxes, you report your operating results, including profit or loss, by submitting profit or loss from business, sole proprietorship, Form 1040 Schedule C, your personal 1040 tax return. So this happens every year. So basically, when you have an LLC, you're going to have to actually file something called Form 1065. And that Form 1065 actually is called an informational return. In other words, you're not paying taxes at the LLC level. You are paying taxes at the personal level. But the Form 1065 actually is an informational return because it allows the IRS to actually reconcile how much the LLC has made versus how much you are reporting for tax purposes. Okay. There's another document that you need to file when you actually file the paperwork with the IRS. you need to file something called Form 1060, Schedule K1. So Schedule K1, Form 1065, and that Schedule K1 is issued to all the members of the LLC. So if you have one member, you'll receive your Schedule K1. If you have multiple members, every single member will receive their Schedule K1 when they actually, and they have to actually add that Schedule K1 when they file their tax return at the end of the year. So basically, they're going to have Schedule C, Schedule K1, and other ancillary schedules as well. Okay. Now, an LLC is very flexible and can also be taxed as a sole proprietorship, a partnership, or a corporation. So the whole thing is that by default, if you have a single member LLC, in the eyes of the law, in the eyes of the IRS, you are considered what they call a disregarded entity. In other words, you can file as a sole proprietorship. So if you are a single member LLC, unless you elect otherwise, you are considered, not considered, you are, in the eyes of the IRS, you are considered a sole proprietorship. So they're going to ask you to file Form 1040 and report your income on Schedule C. Now, if you are a multi-member LLC, you have the option to elect to be taxed. You can be taxed as a partnership. You can be taxed as a corporation. A corporation meaning you can be a C corporation or an S corporation. By default, a multi-member LLC is taxed as a partnership. Okay, unless you elect otherwise. Now, a sole proprietor also benefits from pass-through taxation, so you will report your business's income or loss in the same way. The difference is that you don't have the option to file as a corporation. Now, you're also not required to pay taxes on the full amount of your sole proprietorship's income. Instead, you will only pay taxes on the profit of your business. By the way, if you're a corporation, you are going to file a form called 1120. That form is not an information return because you're paying taxes on that form. So basically, when you file that form, you're paying taxes if you owe taxes. So this is not just an informational form. And basically, as a corporation, you're also required to issue Schedule K1. So basically, your shareholders will have to pay taxes at through your dividends, but also they have to pay taxes at their personal level. So that's double taxation. Now let's talk about how to activate the business structure for your company. Okay, so forming an LLC requires you to file articles of organization, sometimes called a certificate of organization, with the state. So everything happens at the state level for now. Okay, so when you start your LLC, you have to go to your state, the department or the Department of Corporations, and really follow the paperwork there. Follow the instructions rather. So requirements vary by state. Every state has its own requirements. And typically, an LLC operating agreement is actually drawn up to document the members and managers' rights and duties. Okay. So the thing that happened here is that when you think about an operating agreement, this is not really a legal document. You don't have to file it, but you can actually file it because it really kind of protects your business. It sort of clarifies everything for everybody. This is actually experts actually are recommending that you actually file your LLC operating agreement. By the way, even if you are a single member LLC, you still are encouraged to draft an operating agreement because you want to crystallize the conditions under which your LLC is run. Okay, you should also expect to file certain forms with your state agency, usually the Secretary of State, and pay an initial fee that can range from $50 all the way to $500. LLCs also have to file annual or periodic reports and pay a required filing fee in most states. So that's for LLCs. What about other types of business structure? Unlike an LLC, no formal action is required to form your sole proprietorship if you are operating under your own name. If you want to use a different name, you'll need to file for a DBA. You may also need to acquire any mandatory licenses or permits, and these requirements vary by region, state, or industry. Whether you're looking for the liability protection and flexibility of an LLC or a corporation, or the less formal unlimited control of sole proprietorship, it really depends on you. Now, what about corporation? Corporation, basically everything is filed also at the state level, and basically the the formation of an LLC is kind of similar to the formation of a corporation. The only thing is the corporation has, I would say, added bureaucracy. So you're gonna have to have your of course, when you file your articles of organization, they're not called organization. They're called articles of incorporation. For a corporation, they're called articles of incorporation, and you're going to have to think about electing the board of directors. You're going to have to think about the operating bylaws of the company. You're going to have to it's a lot more structured, and it's just a lot better if you are going for a corporation to have a lawyer kind of help you out because the bureaucracy, the needs, the demands are a little heavier than when it comes to an LLC. Thank you so much for your attention. I really appreciate it. In today's conversation, I quickly walk you through LLC versus sole proprietorship versus corporation. I hope you really, so I give you the overview, I give you the benefits, and then I did an in-depth analysis. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.